Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and thanks for joining me again. Another week, another Monday, another time for analyzing some cycles. And to be honest, this week is more or less a continuation of last week's session. Because if you have been part of last week, we discussed a lot of topics. And I promised you first that we also have a look into the Google cycles. So we will do that today. This will kick off the session. Last week we did Apple, so let's also cross-check Google. Second, as I promised, and there was the request here, let's review the German DAX Index, Deutscher Aktienindex. So the European markets are also within our interest. So let's check the cycles on the German DAX. Second topic. And third topic, it was about the Financial Stress Index, which is also one of the favorite sentiment indicators used for long-term cyclic projection. So nothing we can use on short-term, but for the long-term picture, it's quite interesting. So that's it for today. I needed to organize a little bit here my desk, so maybe I cannot be within the setup you are familiar with, but I will try my best to get through it. So let's start with the analysis on Google. By the way, we are live, so I'm monitoring the chat section here at the section, and at the end, as always, you know it, we will get to it latest at the end. So let's start with Google, right? Here we have, no, that's not Google. Here we have Google. Let's clean up the mess. So this is the Google price chart. We are seeing here with this up move, and still continuing upwards. I think since July, we have other indices which seems to move downwards. Google does continue just to move upwards. So first, let's have a look at the spectrum at the bottom of this chart here. So, and that's similar to the S&P 500. This spectrum we are seeing here is not one which I completely like, or I mean, it doesn't matter if I like it or not. It shows us there are a lot of cycles here with kind of similar amplitude. You see that the peak within the spectrum is at a similar level, which makes picking the best cycle out of this area here quite complicated. And you see even the shape and the size is very close to each other. So you can't even use just the size or the shape, how the peaks appear in that spectrum. But that's it. We cannot ignore that fact. It's just not easy to really decide which cycles could make sense or which cycles should not make sense. So we see that there seems to be a long-term cycle, but beyond the 400 days range. So we don't know when this will come down. So to detect this cycle, we would need to switch to a weekly chart. I've shown you that on Apple, we had a clear signal there. So we are left with maybe this cycle here with the length of 175 days, trading days, or this one here with 226 trading days. I mean, even not perfect because we have a very flat plateau here in the spectrum. So the length could be anywhere between 210 or 230, 40. So not easy to pick. I would say this one is one of the most preferred ones That's the second one. And these two, by the way, are also picked by the artificial intelligence, which helps us picking the most prominent cycles. So you will find this here in the area where the count is highlighted here. So this is number 1. This is number 2. So let's go with these two. That's the first one. This is the shorter term one, 127 days, which is at this point in time here. So we could argue, let's see here. So if we just try to count or check the ups and downs of that cycle here on the chart. So let's just, so this is the top. Yeah, so from a zigzag perspective, just trying to align the timing information here for Google on that cycle. That seems to be valid. I mean, that's interesting here in this period. So this is a running uptrend, yeah, in total. However, if we just compare it from here to here, so this downward cycle momentum, yeah, which is this period here, so that's the downward cycle momentum, gave us a sideways move in Google. So even though we have, so it looks like we have a stronger uptrend here in force, as the last downward phase just stopped the uptrend, which seems to have started here. So in back in November last year, it seems that the overall cyclic behavior has changed into a stronger uptrend here. So it shows we are topping here. This is what we have seen in the other asset classes like Apple, which I've shown last week here already. So they turned down since July or late July. Google didn't. So we are in the downswing here, but that's just one cycle. Let's now add the second cycle, which is with a length of 175, which is this cycle here. We can start with the simple one, which has a slightly longer phase. You see it's more taking the longer counts, longer swings into account if we just move back into 2018, for example. So here again, let me show you. That's the kind of trying to connect the key cycles here. I mean, you know, you can't swing trade these cyclic movements, but you see how these downward timing information here are really highly correlated to key reversals in the underlying price. This is what we are looking out. So it's not about swing trading. It's detecting the key turning points, maybe in that market here. So it's about here. Yeah. So it's due. So both cycles, if we just visually inspect these two cycles, they are currently in their downward phase until October, or even end of October. So, and we can combine them now into a combined cycle. This is what the combined cycle then would look like, just monitoring these two cycles here. And I think these are the only two cycles which would be useful in applying to Google based on the spectrum. I think you need to set this into account with the analysis on Apple we did last week. And I think it's showing us the same picture here. However, you know that we are close to an important point to watch. I explained it last week, and next week we will recheck where we are in that situation. But I just promised to update you also on the Google cycles. So I think that's the update on Google. But you need to take into account the disclaimer that this cycle spectrum is nothing which I would rely on. Yeah. So I mean, just for the purpose of doing some cycle analysis, we can do it. But as said, be careful. We could also check the larger index, like why not check out the Nasdaq, which I just did here. So just for fun, you could, and this is what we're seeing here also in the Nasdaq, right? So since July, we saw, and in the index, it's visible, the top here, which also was visible on Apple. So this is what I have referred to, that at that point in time, some cycles referred to the downswing, or at least the upswing phase ended for a lot of cycles. This is what we're seeing to the right side. And if we look at the spectrum, and we can compare it now to the cycles we found or used from Google. So it's a little bit clearer. I mean, we have three interesting ones sitting here close to each other, 124. And I would highlight this cycle first here, 124. Yeah, just have a look at this, 124. You see it here because this is the same cycle we found here in Google with 127. Yeah, so and these three cycles are the same we can find on the Nasdaq also. So that's interesting. And this cycle here has a length of 218. Not the best shape. And you can also see it here. This is the 226. So makes sense to use the same here. 218 and 124. So more or less the same we have seen using Google. And you see the same outlook here. So until end of October, we see the same picture. We could now add, because that's much clearer here, so we could add these two cycles also into the mix. But what we see is that the outlook, and I think that's important to keep in mind here, stays the same. Yeah. So it doesn't matter if we put all three cycles here into the mix. So I will disable the shorter one and the 104. You see that the next important timing point, yeah, and that's what we're looking for by just using the two, which are also visible using Google. It's pointing here towards end of October. And if I now stack up these two cycles, so to have a full combination out of 5, it's more or less a similar picture here. So we have now two bottoms here, but I would count this here as the, so the October period is the main period to look for. So take this into account, looking in Apple, and take this into account for the important situation we need to monitor during this week and next week, which I explained last week, and I will refer back to that next week, Monday. Okay, that's it for the tech sector. Okay, if you're interested in, so let's also bring back the, not useful here, so let's get that. So let's switch to the German market, European market, German Aktien Index. So we are now in Europe, analyzing one of the largest European markets, the German Aktien Index, which we see here on the chart. Also, we can observe a key top here in June, July, which is now reaching the all-time high here. So at the bottom, we see the spectrum, which is similar to what I told you for the American market. So, I mean, let's skip this longer term cycle. We need to check the weekly long-term perspective here because we are not able to see what is the long-term cycle here about. We can only see it on a weekly series. So we need to stick to the other cycles which could come into action here. This one I would ignore. So if we have a close look to that spectrum here, maybe in that case, we should add some more data and start with a more long-term perspective before we switch to the current situation. So that what I will do now in this case here, I will add some more data to the left, which gives us then more indication about the long-term cycles, or gives us a better visibility of the cycle length, so the dominant cycle length, which seems to be prominent in this data set. It will not help us to determine the next important turning point of these cycles, because the phase is not really useful if you put this data or this much data into account, but to analyze what could be a length to use. Yeah, so that's useful because the length information gets quite more visible once we add more data. And I think you can clearly see is that now the peaks show up in the spectrum here, which they haven't before. So that's one beauty or one small tip here. If we just see these flat plateaus or a lot of peaks with the same amplitude in the spectrum, broaden the data, add more data, and then you get more clear visibility of the dominant cycles in regards to the length, not regards to the phase, but let's first start with the length of the cycles we are interested in. And I think that helps us here because we can now clearly see that there's a key cycle around 170 days, another one 310 days, and let's call it the third cycle here 128 days. So interesting here to see, and then you see there's a huge gap in amplitude before the next shorter term cycles would come into play, and even to the right side. So these three cycles get our attention here. And the first, which catches my attention, the length of 128, because it's similar to a cycle we saw in the US tech sector and in Google. So seems to be a dominant cycle, which is currently in this asset class prominent. It doesn't matter which continent we're talking about. So let's first use this with a length of 128 days. Let's have a quick visual check here. And as we can see, so we can even zoom in a little bit. Just, I mean, you would be aware of this kind of cross check. You would also always do. So here the prominent tops and bottoms which occurred at these turning points. We need to validate here if this cycle is in sync, which looks to be the case. So not always, as I said, that's not about swing trading, but it's about identifying the most important turning points in regards to time, which in that case works across the whole range of that cycle here. So, okay, but that's just a quick one. Yeah, I think you can follow me here. What I'm trying to cross check here. So, said that, let's skip that. So, and we can now zoom in. So this is the 128-day cycle, which topped out end of June, quite similar to the American. So this is why we see, or at least one reason why we see here now at the top, which is related to that cycle. This cycle comes to an end here mid-September. So we're close to end September. So we're close to this downward phase here, ending soon. So let's switch back. What else do we see? We also see this maybe even more important 170-day cycle. Let's stack up this one here. First, the single cycle. What's interesting here that we see that this cycle has already now switched to the upside until November. So that's maybe why we could be arguing why we have these sideways movements. So if we add the shorter term cycle, you see here, that's the period, yeah, for the downswing, where we saw this huge upside from here. Now this downswing, which in the end would give us the indication, at least reading these two cycles now, that we would expect another upswing in the European markets showing, so that this sideways correction could be close to end soon. I mean, let's also add this long-term perspective here, which does not alter the projection. Yeah. So I mean, you see even the whole shape switches, but not, and that's always important if we have a look at cycles, but not the timing projection. So I will first, let's check these two cycles. So the timing, what is important here, what we're looking for, these two points here. So this is a possible low, this is a possible top, which is where we are now. Yeah, and if I now add the cycle with a length of 314 on top of that, you will see that we have the same outlook here. So we are now approaching the bottom with an upswing move. So these 3 cycles, which clearly stand out in the spectrum, gave us as a summary now, the summary reading these 2 cycles in the German indices would suggest an upswing into November. Well, maybe no year-end rally, but we need to observe this. Yeah, but that's the clear reading. Let's also add the cycle swing indicator here. Yeah, which it's not, I mean, we are close to the lower band here, if you see that, what I'm talking about. So we are close to reaching the lower band of this cyclic indicator, which signaled here at that point here, the 2 topping periods. Now seems to be close. I mean, we could move a little bit more sideways. So maybe the next 1 or 2 weeks to continue the consolidation before then also from the technical perspective, the upswing could start. So that's the German indice. Now, last but not least, let's have a look at the sentiment perspective and therefore using the financial stress index, which I'm opening here on the chart. So this is the financial stress index, which is provided by the St. Louis Federal Reserve. They take into account, I think, a mix of 13 financial measurements, which is trying to give an indication about the stress level in the financial sector. And based on that analysis, based on the consolidation of these different measurements, they compose the so-called financial stress index, yeah, which we are talking about here. So, as always, when we deal with stress data, we need to take into account that low stress levels correlate with tops in the underlying price series and vice versa. So high stress levels, yeah, or turns at high stress level points then correlate to market lows in the underlying price series. So we need to take this into account if reading or interpreting the cycles. Second, it's a weekly series. So we need to check out also that we're not talking about daily cycles. We're talking now about a long-term perspective from the weekly series. Okay, so let's get to work. What do the cycles talk about here? So I have included, again, a longer sample period here. As we're dealing with long-term cycles, the phasing is not as important because we're not looking for exact turning points in a daily environment. We need to take into account the perspective. What's the dominant cycles in that sentiment long-term perspective? Yeah, this one, I mean, not really usable for 340 weeks, a very long-term cycle. This is a very flat plateau here. So the one which seems to be valid for using here is the 190-week cycle. And in addition to, I mean, it clearly stands out in the spectrum. It's picked by the AI technology as a guidance to pick that cycle. And if you know my long-term analysis of or using the financial stress data, we always had a cycle length of 180 to 190 weeks playing out in this long-term analysis. So I know from past analysis that this cycle was showing up more than once over the past 2 or 3 years. So that's the key cycle to go with. And again, I mean, you can do this with more statistical verification, but at least I like to have this quick visual checkpoint here in regards to the major turns of that cycle again. You know about that. So it's just cross-checking the timing correlation, not the price correlation. So here we have the top. Here, I mean, the low is out, but then here's the low, there's the low. Then here we have clear alignment. Here low, here's the top. Yeah, so that's the I mean, that's not no top here, but then we have that swing here, which is clearly seen if we just do some zigzag. So, and that's the question, we are here now. So I think from an historical perspective, we see that the timing of the changes in trend, they worked. So now the key question is zooming in, where are we in that cycle today? And I discussed this sometimes already here. So, I mean, historical perspective doesn't matter, but if you have followed this channel here, that I have told a possible reversal in the financial stress already back in 2021 and early 2022, which did happen. So, I mean, it's maybe not visible, but we've seen that peak here. And this was an historical high level if we zoom out a little bit. So this high stress level has not been seen, or had only been seen in 2020 and then in 28. So this was an historical stress level here. However, before we reach the top here, but as this is a long-term cycle and we cannot be sure about the exact phasing of that cycle, it's still open. The question is still open if this was the key top here. So if this top in the raw data could be then aligned with that cyclic top here. If that is the case, so let's discuss this scenario for a second, which means that we expect now a period of financial stress moving down into the year of 2025. By taking this into account, that scenario, if we see decreasing financial stress through 2024, this could be in sync with more and more rising stock market indices. So this scenario would support upward moving stock market prices. For example, so this now goes in alignment, bringing the German index into account, that we now seem to have the daily cycles coming into an upward swing. European, I mean, we cannot use it one-to-one, because this is the American financial stress index on the US markets. But here, anyhow, since early 2023, we see now financial stress moving down. So cycles within cycles alignment supporting positive situation for stocks. However, this situation is not finally over. I always explain that we are in a very early stage if you look at where we are at this topping cycle. So there could still be the case late summer. I mean, we are at this point, and this relates also to what I've said last week, that these 2 weeks, so this week and next week, are key weeks to derive which cycles are really the ones to follow until the end of the year. Because we cannot rule out at this given point in time that we might see another upward peak in financial stress, which could relate to another key bottom in the markets in the next weeks. But as said, and I explained this in the session last week, we know more about it once this week has been concluded. So Monday next week, I can revisit this framework we're seeing here based on cycles, which give us then more clarity what then to look after, looking for the rest of the year. Okay, that's it. So I promised last week to check back Google, German DAX, and financial stress. Last week we took already an hour, so I don't want it to overload everyone with long live streams. So I wanted to take the time. You have asked for it. That's the benefit of joining live. And I would really encourage everyone, please try to be alive. So this gives me the best opportunity to really show and discuss what you want to see. Yeah. So that's what I tried to also repeat this week. So if you bring your questions live, I will take the time to answer your questions. So we did it. 3 additional cycle analysis. I think they go in sync with the broader analysis I did last week, which is a key situation this week or last week and this week. I want to monitor. So no really new situations out there. But I'm really, really looking forward that once this week closes, we can recheck and hopefully get more clues which cycle from the stock markets could be valid following into the second half or into end of this year. That's it for today. I see in the live chat, so Indian stock markets, bonds, CPI, a lot of additional data sets. Thanks for bringing this in. And please allow me, I will note them down so that we have next week. Maybe bonds is an interesting asset class to check out. CPI cycles are very long-term perspective, but why not? Why not? And Starlord, just to comment, yes, the trend indicator, based on the new method I've outlined here. I just need to find a slot to bring it into production. So it's working already, but to bring it into production requires a little bit more testing, and you always have some impacts on topics you have never been aware of. So it is there. Once there's the free slot to bring it into production, it will show up here during the next, at least during the next 4 weeks, but I will inform you here firsthand once this shows up. Okay, that's it for this week. Thanks for joining me. So I think next week I will review the key situation. So please join me next week, same place, same time. Thanks for joining me. Have a safe week, stay safe, and feel free to drop in your questions. Bye.